113 million premium subscribers, up 31% year over year. I think people are finally realizing that you guys are just on fire.
Business is performing really well, no question about it.
Why?
So, can you remember Netflix in the era of when streaming first launched?
You mean when you were there?
Back in the day. It significantly expanded the TAM, right? Now pretty clear in video that linear dies, on-demand wins. Same thing is happening in audio. So, was a music service narrowly originally. Now it's an audio service. Right. More occasions for use, more engagement. More engagement drives higher conversion, better retention, longer life, bigger lifetime value, virtuous cycle. Same phenomenon happening on a global scale.
And when I talk about global, it looks like areas like Southeast Asia, which people might think is not necessarily where Spotify would grow, are maybe the strongest areas.
Outperformed this last quarter, along with India as well, and LATAM. So we're hitting on a couple of cylinders at the same time.
Barry, you know, when you guys did the direct listing soon after, I think you had an analyst day, talked to your investor base, or at least the one that was
before.
At the time.
Yeah,
before, before it. And you said, you know, you can expect mid-30s, I think it was 35% maybe gross margins long-term for this business.
Yeah.
You're nowhere near that.
Yeah.
Are you ever going to get there?
I think so. What we said was over time. So you might remember the stock rolled over in October of last year. And I think the reason it rolled over was because we said to investors, hey, don't expect the operating leverage that we've been demonstrating to continue in the future, because we're going to start investing in this thing called podcasting. And initially, it'll be a tax on the P&L, but over time, it'll increase the top of the funnel and will grow faster and be more profitable as a consequence. Now, at Netflix, we had the same phenomenon happen when we began to invest in streaming. And we doubled that investment every year. And eventually, the content became good enough that it became an accelerant on growth. But initially, it's a tax on the P&L. And in our case, it's a tax on the cost of revenue. So it tends to depress gross margins. So we also said in our investor day that one of the reasons that we would be able to expand gross margin is the development of a two-sided marketplace, which we said more about in our investor letter today. And we'll talk more concretely about in terms of the impact on 2020 and future growth expectations and margin in the future. Now, that's mostly a software-driven product.
What is, you know, you say this two-sided marketplace, and I'm not sure that many people understand what you mean. Can you at least explain?
Yeah, well, like Netflix, we're in the business of owning demand creation. So serving content to you that our algorithms tell us you'll like. And if we do it really well, you experience it as a great user experience. You're not exactly sure why. You just know you find great music when you come to the service, or you find great podcasts when you come to the service. And so one of the features of two-sided marketplace, a product we just announced the rollout of in beta, enables us for artists who are releasing new albums to promote those new albums to their fan base on Spotify. Today, labels and their managers and artists don't have those tools available to them. They use mass marketing, which is a pretty inefficient spend, right? But we know exactly who the fan base is for a particular artist, and so we can promote that natively on our platform, like Amazon promotes natively on its platform, and get paid for it. Very high margins.
If we're going to use early Netflix as an analog, does that mean that we have a wave of new entrants still to come?
Maybe. It's a game for big boys. It's a capital-intensive business. Scale matters greatly in terms of competitive advantage, something we spoke about at length at the Investor Day. And there's big spend on podcast content. Now, earlier I mentioned it provides an opportunity for margin expansion. Why? Because it shifts the cost from largely variable to fixed. Same thing happened in streaming at Netflix, right? The DVD business was variable cost, and the and the streaming biz was fixed cost. And there are opportunities to fix the cost in podcast and have exclusives. In music, Jim, as you know, there are 50 million things available on the platform. Everybody's got the same stuff. So discovery drives a differentially better user experience on music, but in podcasts, you can have exclusive content. It's not just discovery, right?
No, and it's also booming. I know my agent says, Jim, it's time. The rewards, the people who are making money on podcasts. Well, you know, I want to do it. Well, okay, we'll take that one offline. Hey, a lot of people think that Apple's got a big music business. It's small compared to what you have.
Well, they have scale in the U.S. The last publicly announced number, I think was, I can't remember if it was 50 or 60 million. And we think they're growing slightly, well, based on their public disclosures, growing slightly less than a million a month. So at about half the rate that we're growing globally. There are geographies in the world where their franchise isn't particularly strong and others where it's very strong. But in Latin America, it's not really a factor, by way of example. Pretty strong in the UK, although we're outperforming them there. So their primary footprint is US-based.
How much do these the partnerships work? I think that help you. The AT&T partnership, we've been talking about AT&T all morning. That's got to be one. They're a big company. That must be just churning and positive.
Well, it hasn't been yet. Maybe they're a little bit distracted.
They got a lot going on.
They got a lot
going on. Although they're talking about their own margin improvement.
But they absolutely have the potential.
6 month free.
Right?
I mean, look, we're all big users. I love your product.
Thank you.
If I could get it for free, I'd get hooked very quickly.
Yeah. Well, look, if they get behind it, it could have some help. We didn't happen to see it this quarter, but the important thing for us is to have a number of irons in the fire.
Right.
And several dials to turn, like we developed at Netflix.
How back to gross margins, not the long term, but actually the current ones. There's some who believe because the ad-supported business was not as strong as the premium, that margins are better this quarter. But if ad-supported starts to move even more positively, you're going to see gross margins actually come down. Is that right?
The mix does impact the gross margin on the business, no question about that. But I think what you'll find is that there is operating leverage to be had in the free business as we begin to, let's say with podcasts by way of example, or natively promoted content of the two-sided marketplace, to pump more revenue through the existing cost structure, which will, with no incremental content cost.
Right.
So it will be margin enhancing.
You mentioned the algorithm. How do you describe how sophisticated they are these days? Is it more than just classifying a song, giving it a half a dozen descriptions, and matching that? How smart is it?
Well, it started out as collaborative filtering. All three of you have similar tastes. They've liked a song that you've never heard of. They like it a lot. Pretty good bet you're going to like it. That's collaborative filtering, right? Now there's been this explosion investment in machine learning and deep learning, and now we're able to do things analytically and as a result, algorithmically, that we weren't able to do a couple of years ago. And so it's getting dramatically better and really fast. I would say when I joined the service, it wasn't very good. It's a completely different user experience today. One of the big problems to be solved in podcasting is discovery. Like most of us here, if we listen to podcasts, probably found them word of mouth.
Right. Very much.
Come on. So now, as we gather more data on your podcast listening, we're exponentially better at recommending content to you. But there is a cold start problem. And so what we've done is to look to your music listening taste to help inform us about your podcast taste.
Really?
And surprisingly, it works pretty well. But a year from now, it will be much better. Talking about podcasts, right? By way of example.
Are podcasts really going to become that important for you? I mean, Jim and I did interview Daniel Ek. I guess it's a while back now when you made the first of the significant acquisitions. But is it really going to become that important a portion overall?
I used to get this question about streaming.
Right. You really think it could be as important as originals are to Netflix?
Yes, long story short.
Okay.
It's a different value proposition, a different use occasion, but people listen to a lot of music, a lot of radio. So everything you consume on radio in the U.S., except for real-time programming like, sports, you're going to consume on demand, streamed, in your home, in your car, in your office, when you're commuting. Right? And there's a lot of that.
Barry, I think you're a relatively young man. You're going back to Northern California, staying on the board. Do you have one more act?
Well, work is my hobby.
Right.
I'm embarrassed to confess.
No, you said that to me from the day I met you. The work is your hobby.
Yeah. So, I hope so. Time will tell. But you can't leave a business when it's not doing well.
No.
I announced my retirement from Netflix in 2004, and then the business got crushed by Blockbusters. The stock got crushed, and we announced I would unretire and recommit for 2 years. That turned into 6 years, and then in 2010, when I retired, the business was doing great again. And after I left, the stock went up tenfold. So you can't leave when your friends are in a knife fight. The business is doing really well, and Daniel hired me to do 3 things: get us in a position to go public, build a team that could perform at a high level in a finance function as a public company, and 3 was hire and train my successor. Okay, so I hired Paul Vogel 3 years ago. We've been working closely together since. I've increased his responsibilities every year since. Hired him to run IR and then FP&A. So if you like the guidance we've given, or at least our performance relative to the guidance we've given since we've been public, you can thank Paul. Gave him the treasurer responsibility. If you like the way we executed the direct listing, you're an admirer of his work. And he's a great cultural fit. He understands a deep understanding of the business. So if not now, when? Another 5 years?
Fair enough.
Yeah.
Barry McCarthy, a legend, Titan CFO. So glad you came on the show. I think your stock's cheap, and best of luck to you.
Thanks, fellas. Appreciate it.
Good luck.
Jim, thanks for sticking around a little bit longer today. What's on Matt tonight?
Well, you know what? I'm going to describe exactly what this contract means for Microsoft, because I think people don't understand it exactly what when you're in that business, that's the greatest business in the world. It's a cloud business. It's about making money. And wow. I don't know. I feel like you're 66. I wish you weren't retired.
You're giving him angst now. Yeah.
It's so existential. Looking at you.
You got a long road to hoe.
And it's happening to all of us. All right.
Come to California with me.